Steve Rattner does it again, explaining quite a bit about the tariffs. But before we get into Steve Rattner, I want to make some points here. The working class always pays. The working class always pays. The plutocracy always does what's best for them. Now, here's the interesting thing. Back in the early days when we were complaining about offshoring and sending products overseas to be built overseas, our government, because of the tutelage they receive from their benefactors, the plutocracy, they didn't think about what it's doing to the current employment base. A few union workers complained and they raised hell, but they never did the job to protect the workers. And to some extent, and this is where we have to take some personal responsibility, we had too many workers falling for the okie doke. We had too many workers believing in the things conservatives were telling them. And conservative ideology, neoliberal ideology, what I mean by neoliberal Democrats as well as conservatives, screwed the working class. And how did they do that? They allowed the offshoring, etc. So we have a pseudo populist in Donald Trump comes and says, I'm going to fix all of this stuff for you guys. And he goes ahead and he wins, barely wins, but he wins an election because a lot of folks believe in the fallacies and their racial prejudices, their gender prejudices. All these things formed a nasty bubble that allowed a Donald Trump to come back into office. Anyway. So now he believes he's going to, because people know that tariffs will likely make a lot of foreign stuff expensive, he can cower that. He can tell people, this is going to help you in the long run, etc. And many of his sycophants are liable to believe it. But what Steve Rattner points out is, look, the genie been taken out of the bottle. You can't stick it back in. You have to create new avenues to enrich, new avenues to pump up the working class. Because what the plutocracy has done in the way it has moved manufacturing around isn't something that can be fixed in a year or two or three at all. And the pain that it will take to get it fixed is not borne by the plutocracy. It will be borne by the American people. And unless the government were to start shoving money into the American people's pocket so that they can then purchase products from the private sector that's going to be retooling over here, and at the same time put some price controls on those companies as they rebuild, and that price control, etc., would be a penalty for them having been traders to America. Until we've done that, but no American government is going to do that. So as such, we have to create new avenues. So let's go ahead and listen to what Steve Rattner has to say here, and then we'll take it on the other side.
In 1988, Dick Gephardt and a lot of Democrats were fighting for tariffs. They were fighting for what they would call fair trade, lost that fight. A lot of populist Republicans that came in with me, including myself, were arguing the same thing in the mid-90s. And here we are 30, 40 years later. And the question is, can you get those jobs back? Because people like Dick Gephardt lost that fight back in the 1980s. Can it be unwound? Most economists say it cannot. Most of Wall Street says it cannot. And yesterday suggested that they basically let their money talk on what they believed regarding tariffs.
Yeah, Joe, look, you can't put the genie back in the bottle. We can spend a lot of time, kind of like who lost Vietnam. We can spend a lot of time debating what happened in the 90s and the early 2000s and how we ended up with a much, much larger trade deficit and many fewer manufacturing jobs. But what's done is done. Let's take a look at a couple of those numbers. Let's start with the stock market yesterday. We talked about the almost 5% drop. This is is actually $5 trillion of wealth lost since the inauguration. The stock market had already been starting to go down as people got more and more nervous about what Trump was or wasn't going to do. So a huge drop. But here's what's actually quite interesting. The stock market drop here was actually larger than the stock market drop in every other major index, every other major country. In Japan, it was down 2.8%. In Europe, it was down 2.6%. In the UK, just 1.6%. And in China, just 0.6%. So why is that? Trump thinks he's hurting all these people. He thinks everything is, a negotiation where somebody wins and somebody loses, and he thought he was the winner, and we turned out to be the loser. And the answer is because, based on a set of projections from the Budget Lab up in New Haven, we are the loser. The impact of this, the long-run impact on GDP of this, is actually going to be, projected anyway, to be worst on the U.S. of any other major country that we trade with, except for Canada. Canada has a special problem. They export a lot of oil to us. We are net oil exporters, but we do bring in some Canadian oil for complicated reasons I'll spare you. But essentially, they believe that we will have the worst economic impact. What actually could be positive in the UK. Trump's tariffs on the UK are only 10% of among the lowest. The EU, a tenth of a percent, Mexico, a tenth, and so on. And China, only negative 0.2, because these countries have other things they can do. Their consumers are not going to be paying the cost of these tariffs because they're on the other side of it. And therefore, they are actually going to have slightly better economies than they would have had. So the irony is we're the worst. And yes, in terms of that JP Morgan projection, I think we are definitely in the 60% recession odds for this year. This economy is going to soften materially.
Let's move to your second chart, Steve, putting this into some historical perspective.
And you can see back in 1980, tariffs have been coming down for a long time since World War II. But you can see in 1980, we have a meaningful tariff rate. But then this is what Joe was talking about. All the trade agreements brought our tariff rate down to just around 2%. This circle is Trump-Biden. You can see Trump did some tariffs in his first term. Tariff rate went up a little bit. This is, for all of his talk in the first term, this is all that happened. Biden brought them down part way, and now we have this. And this, going across here, this is 1909. The last time we had tariffs at this level was in 1909. Now, many of us studied in school about the recession and about how we put tariffs on. Some say that it caused the recession. It didn't, but it exacerbated the recession. The famous Smoot-Hawley tariffs. That tariff rate here was actually a little under 20%. So these are not only the highest tariff rates we've had in more than a century, but higher than we had when we had what every historian would tell you were the worst tariffs we've ever put in place until now. So let's turn to some of the individual impacts, because obviously the market goes down, but all the other stocks do different things. And so we had a fairly disparate impact. And there are good reasons, and I'm not going to go through all of these, but I'll give you a couple of examples. Nike down 14%. All of, I shouldn't say all, probably virtually all of their clothing and their shoes and their sneakers and so forth are made in Southeast Asia, which have some of the highest tariff rates, as we'll talk about in a minute. Boeing is a huge exporter of planes to other countries. Those countries can now buy Airbuses. Could be really bad for Boeing's business. Apple makes virtually every iPhone that they sell in China. 54% tariff coming into effect there. Amazon, you would be surprised at how many packages you order from Amazon that are actually shipped directly to you from somewhere overseas where they're made, and a high tariff will now be paid. JP Morgan, the banks could be facing pressure for another reason, and so on and so forth. I'll just mention quickly down here, Walmart and Costco. Why did they do comparatively well? Because they have such buying power that they are likely to be able to hold down their price increases and take market share from other retailers.
All right, let's move to your last chart, Steve, and it's time for a little math.
I'm going to do my best to help, but their math would not get them through math class either. The economics wouldn't get through economics class. The math isn't going to get through math class. But let's talk about what they did. So first of all, just to put some stark numbers next to it, you can see these are our top trading partners, European, and what the tariff rates are going to be. European European 20%. China is actually now 54% because he added 20% earlier in the year. So that gets up to 54. Japan 24, South Korea 25, Taiwan 32. You'll notice China, Mexico and Canada are not on here because he did separate deals with them also, and they will pay some tariffs, but he does have that trade agreement he negotiated with them before. But one of the points I want to make is that some of the highest tariff rates, the way he did this, and I'll explain that in just one second, some of the highest tariff rates are under some of the poorest, most struggling countries in the world. And so Bangladesh is now going to pay a 37% tariff rate on stuff they sell to us. South Africa, 30%, and so on. So this is going to cut our purchases from these countries dramatically. It is going to hurt these countries' economies dramatically. It is not just bad economics, it's bad foreign policy, and it's inhumane. So you ask, how do they calculate it? I'm sure everybody has seen this formula before. I'm joking. And I'm not going to go through it all, but we got a lot of Greek letters. We got phi, we got all this stuff. But basically, Willie, it comes down to what you just said. The way they think about this, they think that if there is a trade deficit, then by definition, the other country is manipulating trade, and therefore they calculate the tariff based on the size of the trade deficit relative to how much they send us. So the bigger the trade deficit relative to what they send us, the higher the tariffs. It makes no sense. You're not going to find an economics professor on the planet who's going to tell you this is the right way to look at it, but it's emblematic of the whole mess they've created.
All right, Steve Rattner nails it, right? Look, Steve is a neoliberal economist as well. Don't ever think otherwise. But that doesn't mean that his accuracy in what he's talking about needs to be questioned. The thing about it here is the following. Yes, the genie is out of the bottle. You can't stick her back in, but we sure can create policies, progressive policies to mitigate all these issues. We can create progressive policies that starts to rebuild factories, and we could do this. We could say, I tell you what, private sector, we want factories that build these things. You don't build it, the American people will build it, produce products out of that factory. And you know what? Because there will be no incentive for shareholders and executives, those prices would automatically be cheaper than if you make it. So you start building your factories now, or we'll start building them and employing the American people at a high wage. And at the same time, instead of giving the money to shareholders, we give it to workers and create a product at a lower price. You guys decide whether you want a more collective economy or a more corporate economy. And I tell you what, watch how quickly these guys start to manufacture and manufacture more efficiently. There's a lot of things that can be done if you have the fortitude, the moral fortitude to exact it out of those who've been stealing from us for decades, since the inception of this country.
We spend a lot of time deconstructing the news, trying to parse it into a form that everybody can understand. We try to find those little nitpicks where it flies above the fray, etc. If you really like these videos that we do, I want to ask a big favor. Please go ahead, number one, subscribe to our channel, and number two, please join if you can. Thank you so kindly for watching. Keep watching. Please remember to share. We must populate the entire internet with our progressive message, a message that we know is what most Americans say that they want. So help us, please join.